Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We've got a great show set up for you, and the sun is shining. We've got a packed studio. I'm Harvey Freed. To the right of me, Harry Glanz.
Good morning, everybody. Good morning, Harvey. Good morning, Becky. Glad to be here. At least the sun is shining. It is spring. We did a video yesterday out in the middle of the snow.
That was fun, Harry.
It is spring.
4
Why
inches,
not? What's the difference if it
inches.
snows or not? People are still buying homes. People still need mortgages and places to live, and business is really, really strong.
That girl across from us, Becky Alley, the top 1% of all originators. Becky, congratulations again. You were nominated for another thing, and you're part of all sorts of things. You're one of the best loan officers out there. So if anyone's thinking about purchasing a house, definitely this would be a great show. We've got Lisa Lawson. She just went out to get our guest out in the lobby who's running a little bit late. Hope Williams will be joining us also from Keller Williams. And there's a lot to talk about. Again, we'll touch on that National Association of Realtors thing that's going on. Pretty big news. And we'll break that down just a little bit for you to bring you up to speed. But also lots of fun stuff, Becky, going on in the mortgage world. Yes, you can buy a house today. Lots of down payment assistance. Lots and lots of good stuff.
Yeah, I mean, it's, we talk about it often. And, regardless of there's snow on the ground and the sun shining, it's not. People are actively looking for homes. They have never stopped. It's been spring has come early every year for the last 5 years. And Michigan has been that 365 state where if you're either looking for that second home or you're that step up home, investors are constantly looking for new homes. And the biggest thing right now is, I feel like the narrative is how we're going to help the first time buyers get into these homes because they're going to have even more competition than anybody this coming up season when it really starts to turn up a little bit.
Yeah, Becky, especially when right during COVID and then after COVID, everybody was panicking during COVID. What am I going to do? My house won't sell. And remember, we were in that time frame where people were worried that their houses wouldn't sell. But then and then people started moving around. They started moving around the country. All of a sudden, appreciation accelerated. That's where we are now. The lack of inventory has really hit all markets, okay? Especially here in southeastern Michigan, there's a lack of homes, and people are standing in line again. I think this spring, and we have Hope Williams, she'll tell you what's going on in a realtor market. The problem is there aren't that many homes, and there's 8, 9, 10, 12 offers on a home in a single day, over list, okay?
Yeah. Seller's
market, those kind of things, and that is going to continue, everybody. It's going to continue throughout this year for sure.
And to be honest with you, no one is exempt. And what I mean by that, it really doesn't matter what your price point is, whether you're the $100,000 price point or if you're the $1 million price point, you are still in these accelerated and highly competitive situations. I have a buyer that's in a $1.2 million price point and they're losing 2 cash offers, outbid where they can't even. Yeah. There's 5, 6, 7 offers on one property and they're losing to cash. And they're like, Becky, where are these people coming with cash? And it's because they had the equity in their homes in some of these situations, or they sold and they've been renting in the interim. There's so many different caveats, but you have to be ready because even when people say we're going to get a little bit more inventory on the market, it's almost going to be, it's void because as soon as one house comes on, you got 7 people that are going to gobble that up. And I feel like we're also going to see a lot of that intermingling between households where grandma's selling to, grandchild and so on and so forth. So then you're going to get a lot of false inventory too.
248-539-9797. Hope if you pull that microphone near you, you were going to talk from the other room.
Right, I'm talking to the room, right?
Good morning.
Good morning.
Good morning.
Hope
And thank you
Keller
for
Williams.
having me.
All right.
Yes.
How's your morning going, Hope?
My morning is good. It's
Good.
always good, right?
Good.
We're
Everything's
up
great.
and everything is going well. So you know what? This is going to be the situation. This situation with the housing until we get more houses on the market and more people selling. But I do want to bring some optimism to this because the thing is that people always have a reason to move, right? And so what I advise my buyers to is, first of all, just prepare yourself. Who I see this affecting the most are I would say like the vanity shoppers. I just want to upgrade my home, right?
Yeah.
If you have to move, you have to have the ability to sustain. Right. Mm-hmm. And so I think it's up to us as agents to educate the buyers and to prepare them to know that it's not just going to be 1 or 2 bids. You're not just going to look up and find your perfect home. It's not the same market as when your parents shop. And that happens, right? Before they meet us, they've talked to grandma and grandpa and they've tried to educate them on what to expect. And you don't over offer for a house.
Yeah.
That day has gone.
Yeah.
So you need a very well versed buyer's agent who can tell you what to expect and how to prepare for the market. And yes, you may have to offer more than you intended. So get prepared with a good lender like Lisa that I'm used to working with, or this team who can actually tell you some creative ways to get in a home and look at maybe possibly doing a appraisal guarantee or something that is going to attract the seller.
We're going to go to Lisa, but definitely you're going to need $5,000 or $10,000 extra. The two offers I was working on this week, they were both over the list price. Got the calls from the agents, from the listing agent. They said, "Can we make up the difference in case there's an appraisal issue?" Lisa, $5,000 to $10,000 on those 250, 300s or even higher. That's not the problem. It's when we start getting into the spring and summer, they're going to be $30,000, $40,000, $50,000 over asking.
Yeah, I mean, the farther we go into the buying season, usually the more that deficit has to get covered. So right now, you might get an accepted offer with 5, 6, 7,000, maybe 10,000. 2-3 months from now, you're going to be doing 20,000 over asking and 25,000 over asking, and so sometimes you have to think of more outside of the box in creative ways. I recently had a client get an offer accepted, not because of the price. The price was actually a tiny bit less, but the seller really couldn't move for 60 days.
Right.
And so sometimes you have to get creative. And so they gave them, now this is like unheard of, 60 days free occupancy, which means they're actually going to make a mortgage payment before this person pays them rent, right? But sometimes that's what you got to do. So you have to have really great communication, really great agents that are willing to be like, look, my person really wants to move. Is there something that maybe your seller really needs that hasn't been offered? Is there anything that we could do? And think outside the box, because sometimes that's what gets the deal done.
So flexibility is the key.
Absolutely.
And that's what you're saying. So right now, a lot of buyers are forced to being flexible because of, if that offer gets accepted, it's usually the 9th, 10th, 11th offer that they put in. So that's what's going on. And if you don't buy that house now, and let's just use simple numbers, $200,000 house, you don't buy that house, let's say, and it goes up 10%, you're going to pay $220 next year for the same house this year. So if you've got to come in 10 over, you're still making 10, right? Because of the appreciation. So, and those numbers are the simple numbers. As Becky said, even in the $1 million price range, the $2 million price range, the $500,000, it doesn't matter. This is cutting across all boundaries. There's no safe space here. So you're going to have to make it, but that's what you have to do to get the house. It's just what the market is dictating. Again, wasn't like this in 2007, 8, 9.
No, it definitely wasn't. And it's a complete, you can't compare the two. It's like
Right.
apples and pineapples.
You can't.
One's spiky and it's going to get you. In 2008 was a spiky little fruit.
Oh man,
right?
I love pineapple.
I do love pineapple too, yes, but it is totally different. But
It is.
The truth is that even in 2020, when people are like, "Oh my God, you paid $100,000 over that house, right? Because you wanted it, right? I wanted to win." But at the same time, you're coming off 20% appreciation. Those people look like geniuses, right? Real estate is a long game. And even if you overpay for a property, and let's just say it dials back, and you did unintentionally put yourself in a negative equity position, if you maintain and you retain that property, it will eventually come back to where it was, as we've seen in 2008, 9, 10, 11, right? As soon as we came out of that, it went right back up to a 12% appreciation. We can speak on this because not only were we all in the business during that time, we all had houses during that time. We also had to advise our clients. You're talking, we had 2008, the housing crisis, and you had foreclosures, you had short sales, we had COVID, we've had low rates, we've had high rates. We've seen it all. It's cyclical, but you have to see where you went. You have to go backwards sometimes to see where we're going. And where I see we're going is that we're still going to be an appreciating market. It might not be as accelerated, even if you err on the side of caution of a 3% appreciation. That's still 3% in your pocket versus your landlord's
Still
pocket.
appreciation.
And there's a reason why the landlord does not care what the interest rate is that I'm giving them. They
Right.
do not care because they're going to cash flow and you're going to rent their house and instead of buying your own. That's just how it goes.
248-539-9797. All morning long, we're going to take your phone calls. Of course, it's the sports station, so coming up after us, Waypac Caputo. And there's a lot of excitement here in Southeast Michigan. Of course, Michigan State with all the Michigan State fans around. But yes, that's Oakland University. That's Oakland County. That's what we're talking about. Keep it here on 97.1 The Ticket. It's the Hardcore Mortgage Real Estate Business Show. We'll be right back. Welcome back to the show. It's a Hardcore Mortgage Real Estate Business Show. We are brought to you by Capital Mortgage Funding, powered by CMG Home Loans at MLS 1820, Equal Housing Lender. You can call us at Capital all week long, 1-800-LOW-RATE, the best mortgage banker.
Hey, Harv, a couple topics before we get into it. We have hope here. We're going to talk about the National Association of Realtors, the settlement that they have to pay, $418 million, things that are going on. I mean, that's a lot of money. And also we're going to talk about the Federal Reserve met again, decide they're going to hold for the fifth time interest rates. So the two things out on the table right now are what are rates going to do and what kind of commissions you're going to have to pay your realtor. I'm going to tell you it's going to be a lot of the same. All right. Number one, rates aren't going down. Right? They're not. They're not going down to 5.5 this year. Not going to happen. So there's an article that says, buyers have settled into the higher rates. Well, higher rates are relative because right now it's the median rate for the last 40 years where we're at right now. But nobody wants to hear that truth. But what's going on is that it doesn't matter what the rate is now. If the rates do go down, we'll get you a lower rate. And we had an instance in the office yesterday, and Lisa was part of it, saving somebody $300 a month. They bought a house within the last year. Lisa calls them and says, hey, listen, I could save you money. Guy says, $300 a year.
They called me.
$300 a month. $300 a month. That's a lot of money.
327.
All right.
That's two nights out on the town.
And they didn't want to do it. Okay, which I don't understand. And by the way, rates go down, we'll do it again. So everybody out
Under
there,
the rate rebound,
if you're saving money, rate is irrelevant. Now let's go to the realtor situation right now.
I just real quick on the rate thing, just to and then because I definitely want to talk about NAR for sure. So with the rate thing, let me just give you a scale. I bought a house in 2018. In 2018, the rates were just under 5%.
Right.
I completely renovated my house. Then at that point, I did a cash out refinance, reduced my interest rate in 19 because the rates went down. Well, guess what happened in 2020? The rates went down again. So not only did I refinance again and drop my term, I ended up only paying $100 of what originally I bought it for in 2018 per month, because you can do things very strategically. You can slide the rate with the rate down, do as many refinances as you need to, as long as you have the equity and you have with a right game plan where it is putting you in a lateral position.
And you could shorten the term too and pay it off sooner.
You don't have to start over.
So you don't have to start over.
I did not lose any time and any equity because I allowed that appreciation to work for me.
Okay, now oversimplified, the National Association of Realtors, we know that realtors are in a panic the last couple of weeks. Okay, so Hope, here's what I'm going to tell you. Realtors are not going to be selling. The consumer, I don't know what the consumers are thinking, but no realtor is going to just take 1% commission on a house. It's just not going to happen. So everybody out there, it's thinking there's a panic. No. The lister, okay, you list a house, the lister is going to get their commission. What cannot happen is you can't advertise what you're going to pay in commissions any longer on the MLS, right? So on that MLS ticket, it's not going to say 3% to the seller agent or 2.5% like it did. You could always, and this is not a dirty little secret, I'm not giving anything away here. Hope, correct me if I'm wrong.
Okay.
You are, as a consumer, you were always able to negotiate what commissions were when you're selling house, correct?
Absolutely right.
Right. So I think this is a lot about an initial reaction. And by the way, this might not go into effect because they have to make a ruling by July, correct?
That is correct.
So there's probably going to be, and this is my opinion only, just one person's opinion. There might be a compromise. I don't know what it's going to be, but this is not going to stop people from selling houses. There's no consumer, I don't believe, that is going to write a check to their realtor to sell their house unless it's agreed upon by all parties. So I don't know. I'm just thinking about it, and I'm saying to myself, I'm just a mortgage guy. And the realtors will figure this out. People continue to buy and sell houses.
They have to.
And the cream always rises to the top.
That is absolutely right. From my perspective, if you've been doing your job as a buyer's agent and sharing the agency disclosure with the clients, this is something that you've merged into the conversation anyway, right? Our buyer's agreement already has that at Keller Williams Advantage. We already say what the commission will be, right? So we're upfront with the client. Those who are following their training, I can speak for myself, are doing that. And it goes something like this. Hey, Harry, listen, as your buyer's agent, I'm going to go over your agency disclosure and we're going to discuss what I'm going to do for you for this 3% commission. A good agent does that. You have that conversation.
Yeah.
So it's nothing new. Now, listen, the question is, who's going to pay the commission?
Right. Now, how much do I have to pay?
Right. And what that's going to, and so part of that education is, hey, we need to look at houses that you already assume the worst situation that you may have to pay part of the commission if the seller doesn't want to. Right. So how does that look? It looks like you staying under your budget.
A certain sales price. Yeah.
A certain sales price. So for me, this is nothing new, but for those who haven't been doing it, it may be a little bit of a growing pain.
Yeah.
However,
It's
the
kind of
public
like
needs to be
TRID.
educated.
It's kind of like
Right.
TRID. Remember when TRID came
Yeah.
out? Okay,
So I think-
and we had to disclose everything. Well, the mortgage people that were disclosing everything up front never get affected
No.
by new regulations or guidelines or laws.
Right.
If you operate above board, and it's all in disclosure, whether you're on the real estate side or whether you're on the mortgage side, it's all about upfront disclosure. And
Absolutely.
I believe that's the key to this right now.
It is.
The thing is real estate hasn't been as regulated as the lending industry or even title industries. And so I feel like that this has been a long time coming as far as just mandating that regulation. And it's also going to push out some of the real estate agents that maybe got into the business that weren't, you're just getting it just part-time just because they wanted to sell a couple houses.
past
maybe their
couple
family
years.
was
Taking
on the boom.
orders.
Yeah, so I just want to clean up a couple of things. So the NAR lawsuit, right, it was alleged conspiracy, okay, I'm doing air quotations, of NAR's adoption of implementation of a rule that requires all brokers to make a blanket non-negotiable offer to a buyer broker compensation when listing. So basically it's saying that, and this could take place in July 1st, right? So the settlement included banning seller's agent from a cent compensation to a buyer's agent. What we're talking about, where we're saying the buyer's agent's got to pay, the seller's got to pay the buyer's agent 3%, right? That's always been negotiable, like we've always spoken about, right? It's eliminating the fields in the MLS. So again, this is something that your real estate agents are seeing has nothing to do with you and how they communicate with each other through their internal systems. Banning the requirement that agents subscribe to an MLS to offer or accept compensation. Again, this is how they speak to each other. Your agents, they have their own network. Mandating the MLS participants working with a buyer's agent to enter into a written buyer's broker agreement and requiring buyer representation agreements to all members. What does this mean? This is the key part, right? The buyers having agency agreements, because when you are working with a high caliber agent like Hope, you are in an agreement with her. She's outlining exactly what her services are. What are you getting with her? What is she offering? What is she not offering? And what is she going to offer to you as her service? And what are you paying for that service? Right. And the problem is that you were working with someone for like 6 months, let's just say, and then your buyer, they didn't know any better. Oh, I just called the number on the sign. And next thing you know, you had this other agent swooping in and you didn't enter in this agreement. And now they're
Now you've
trying to
got
take your
nothing.
client.
Yeah.
So this is going to also prevent those kinds of things from happening. It is letting our consumers know that when you are working with somebody, you are working with somebody, and this is your person, this is your hired professional that's going to help navigate this entire situation for you.
Let me keep rolling with that. Transparency, it's bringing that to the forefront a little bit more. Hey, it's costly. Maybe it costs you a little bit. It's more costly if you don't have proper representation.
Yes, it is.
It's going to be way more costly. And we continuously always see that in our marketplace. Hey, we take your calls here, 248-539-9797. And we'll continue this conversation a little bit about what's going on with that. Again, they can appeal the case, but more or less, it was considered the norm for years. Whether you want to pay 1%, 3%, 6%, or 10% commission, those have always been an option. There's no gun to your head that says you've got to go ahead and hire a real estate agent. But again, probably more costly if you don't hire a professional to represent you. We'll talk all about this, probably continuing through the spring and the summer as we get a little bit closer to that, and we'll keep you informed.
I think it'll
different
settle
things.
down. I think the heightened, sensitivity and the reaction, it's going to settle down. But I'm sure in your office, and a lot of you guys were going crazy, right?
Absolutely.
Well, a lot of people were just going
Yeah.
crazy because they're
Legalities.
uneducated, not really understanding what are the facts, not your
Right.
opinions,
And
right?
the
We can have an
reality-
opinion-based conversation, but what are the true facts of what's really happening in this situation?
Hey, listen, Hope, when rates tick up an eighth in one day, our office goes crazy.
Yeah,
so
we
I
get
can,
it.
I can only, people run into my office. Oh, Harry, this rate is 5.5. No, it's not. Just take it easy.
And
Yeah.
the truth is that
Just
the sellers
go, right.
that they've settled with this lawsuit, they're going to get $7 a person, and then like the attorneys that hire them. I mean, they're going
to
to
get their cut.
Yeah, I mean, it's just it is what it is. I mean, there's money changing hands everywhere that are beyond anything that I could ever understand, which is fine. But the truth is that I saw an article where it's like, does this mean that the housing prices are going to come down? No.
No.
So if the seller isn't paying a higher commission, does that mean they're now going to take less for the house?
No.
They're not. It's still going to affect the buyer
The
more so than
market
anybody.
drives the price. It has
Right.
nothing to do with commission and fees. It is the market and the value that always has driven the price. What it is going to affect is buyers and how buyers are able and how we're going to structure deals so that buyers can get in, especially not necessarily people who've got some money, but first time home buyers, people who are, a little bit tight on a budget. They might not realize that they might have to come up with some more funds, or you're going to have to negotiate some concessions to cover that commission. That's what it's really going to affect.
Right. Right.
Yeah.
And as always, the industry always figures it out.
Yeah. Well,
You know,
like I said,
always
we're
be
going to
smart people.
negotiate. Yeah.
Yeah.
It's going to probably play into the seller's concessions a little bit more.
it's
Again,
gonna have to.
manipulation of the sales price a little bit. At the end of the day, it's always
It's
net,
old
net.
school lending. It's going to
Yes.
be like it's belly to belly, skill based
Yes.
market. So skilled professionals doing business, skilled professionals together, business to business, and navigating it for our clients. You can't just get in here and go willy nilly anymore because you have to be able to understand
Right.
how to work the numbers, not only for your seller but also for your buyer. And it's also going to matter who you're communicating with as a buyer's agent to the listing agent, because it's always been that way anyway. 6% has been. Would you love 6%? Yes. Are people always getting 6%? No,
No.
it's negotiable.
And that
It's
6%
never
was
changed.
split, so it's 3 and 3.
Yes,
really.
and it's
Yeah.
always always negotiable.
If you think every broker is getting 6% on a $4 million transaction, it ain't happening.
You're doing a lot of those
Oh,
4 million
darn.
ones.
Yeah, that's what I do, but it's not happening.
All right, the music says we're up against a quick break here. Keep it on 97.1 The Ticket, 248-539-9797. All your calls.
I think those that qualify for DPay.
9:31 if you're just joining us. It's the Hardcore Mortgage Real Estate Business Show. We take your calls all about real estate and mortgages. 248-539-9797. Always here in the studio. Hope Williams joins us from Keller Williams. She's been a guest before. And always talking about sellers' concessions and all these first-time home buyers out there. There's many of you out there trying to just figure out how to navigate this very difficult marketplace. Multiple bids, so you're up against a lot of families. You also might be working with a down payment assistance program, so you don't have a lot of extra money to overbid, and you got to be careful. You need a really good plan, and especially if you're starting to overbid, and then all of a sudden the appraisal comes in a little light, because it will reflect what the norm is in that area. So again, having extra money in your pocket, Lisa, is always a good idea. We have these deeper conversations because things do change. Again, we just have a regular straight buyer, but now all of a sudden they might need 20 or 30 grand. So our beginning conversations are talking about, do you have access to your 401k? Because again, this is a long play.
And you get a gift.
Yes. Can you get a gift from somebody? So there's a lot more. There's a lot of details that goes into a transaction, especially moving in 2024.
Yeah, absolutely. And, you have to be prepared, especially because we were just talking about how the way realtors get paid changing, that might affect how much funds a buyer would have to bring to the table. So we ask questions not because we're trying to be nosy. It's because sometimes things change in a little transaction. Sometimes you fall in love with a house where the taxes are much higher than we anticipated for some reason, right? Or it's in an area that you weren't even looking for, but this is your dream home, and all of a sudden instead of $3,000 a year in taxes are $5,000. So the payment's higher. So we've got to shift and pivot, and getting answers to these things up front and knowing everything up front allows us to do that. It's not like we're trying to be nosy. It's not like we're trying to get into your business. Trust us. Every loan officer here could care less about your personal business, but we want to do what's best for you and make sure that you have all the options that are available to you. In case something comes up, we can pivot and make sure that you get into the home that you want.
All right, let's go to our first caller here this morning again. We want to hear from you. 248-539-9797. Good morning, Brian, and welcome to our show.
Hey, guys. How are you?
Morning, Brian.
Good morning.
Doing great. Listen, I've been listening for probably the better part of 20 years, the ups and the downs, and you guys have been a mainstay in this industry, so kudos to you and yours. I wanted to say, look, when you have periods of economic stagflation like we're experiencing, normally high interest rates should put downward pressure on these home prices, but we didn't experience a 100-year pandemic in the past 20 years, so we have this weird bubble thing going on. So with the National Association of Realtors settlement, I think what you're going to see is more pressure on realtors to take less for more services. And what I mean by that is you'll find some of the larger groups that are going to have to move those commissions down. Not that the mortgage brokers really care about that, but I think from a consumer standpoint, you'll have a more savvy buyer that will say at whatever price point, $100,000, $200,000, $1 million, $10 million, doesn't matter. I'm going to demand that you take less, and I'm going to demand that I get the same level or more services, and either that's by you making it up in volume or larger conglomerates taking over in terms of the realtor representation and being able to do it at lesser commission amounts. But you're going to find a more savvy consumer now. I think this season will play that out, and it will show you that realtors are going to have to really, really step their game up and really deserve 3%, even on no matter what the transaction level is going to be. But I think what you're going to see is, hey, these 2s and these 1.5% are going to be the norm for the same level of service. And I wanted to get your feedback on that and see what you guys thought about how this affects the buying season and how this is going to affect the realtors. I think this is really big. This is huge, and this is going to have a play in price.
I think, listen, I like where you're coming from. I like all the statistics you're throwing out, and I think that in general, I think that whatever industry you're in, when there's a big change like this, everybody has to step up their game, and the industry figures it out. Here's the one flaw with your example, okay? It's still a seller's market, and demand, you ready? A demand is still very high on the buy side. So when you have less demand, okay, when you have more demand and less supply, it's going to drive the prices up. So your example is spot on, except for one problem. There's no inventory. So it's driving the prices up, so you're not going to see until that inventory starts coming back on the market or there's a downturn in how many buyers are out there, prices are still going to go up. And that has really nothing to do with what you're talking about on the realtor side of the conversation.
Commission has nothing to do with
I think
value.
they're mutually exclusive issues, but I think you're right that everybody's going to have to step up their game when an industry goes through potentially, remember, you have till July, a monumental change. So as long as there's demand prices are not going to come down.
You get the last word, Brian.
Yeah, commission
Actually,
is,
I wanted to and to our real estate professionals, right? They do step up their game. We do have high level referral partners that we are working with that make sure that our buyers do get the top of the line service. Now, just like when the lending industry was regulated and we had to get licensed, it cleared out all the bottom feeders, right? It naturally was a cleansing that the industry needed to go through, and I'm thankful for it.
The ones that are scared are the ones that are not doing business, not the ones doing business.
The ones that are high level functioning,
They don't care.
getting their agreements, going over the contracts. They're always been doing business. They're always going to continue to do business at a very high level for both the buyers and the sellers. I love the call for sure,
right. And I think this is going to be a cleansing in the real estate industry. There was, I hate to say, but a lot of part-time realtors. I mean, I literally had, I think I've talked about this before, had a realtor's like, you can't call me until after 6 because I'm at my day job.
Jeez.
I'm like, I'm sorry. Like, what do you work? 6 to 8. I was allowed to talk to him 6 to 8 Monday through Friday. Or I'm sorry, Monday through Thursday because Friday night was his time.
The realtors that are doing business are saying, okay, just let me know what happens. I got to go out and I got to sell houses.
So
okay,
I think it's going to clean up a lot of the
you guys,
part-timers and
I agree with that totally. So let's let Brian, last words on that. Go ahead, wrap it up.
Got it. Yeah, I agree with everything I'm hearing everybody say, and I think my last word is going to be, I think what you're going to see is across the board, and I'm kind of an industry vet. I think you're going to see reduced commissions be the norm until pricing starts to come down. Realtors across the country will see 3 not being the norm. It will not be status quo. I don't care at whatever pricing point. And I think they're going to demand, the savvy customer, hear me, the savvy customer will demand the same service at a lesser pricing point. Thanks, guys.
All right, my man. Thank you very much. Appreciate the call.
I'm going to take the other end of that. Look, these hardworking real estate agents out there, what they do is they stage your house. They give you, the list is, I saw the laundry list that came out, a whole bunch of title people were putting out, patting the real estate agents on, and really showing all the different things. But just even the staging, look, I'm going to work with you even on the list side here. I'm going to stage your house. I'm going to spend money on landscaping. I'm going to declutter and do a deep clean on your house. Marketing, I got that on here. Social media.
The commission is not going into their pocket. That's what I need everyone to hear. So if you are listing your home and your agent is saying this is the fee, what comes out of that fee is photos, marketing, staging, and then they're also their reputation of getting traffic, high traffic to get those multiple
and driving
offers.
your price
do you want to go through the drive-in window, or do you want to sit down and get white glove, wait on me, hand and foot service, and sell my house?
The menu is not the meal.
What do you want?
The menu is not the meal.
I think people think that if it's 3%, that 3% goes into the realtor's pocket, but it doesn't because first of all, I was going to say it gets split between
the realtor and
the realtor and the broker. So half of it goes to Keller Williams, for example, and the other half might go. But she's got to pay all these things out.
I'm selling my house. I'm selling my house.
Right.
I'm just saying. Yeah. I'm not, but I'm saying let's role play. Okay, I'm selling my house. How much money are you putting in my pocket? I don't care what you make. Just give me what I want.
Right.
And to the other point, like Brian, to his caller too, he was saying, like the price are going to go down. It's not, because as a seller, it is a seller's market, as we all communicated very clearly. Everyone knows, Harry knows, we said it. And if I'm selling my house and I'm going to say, okay, I'm going to pay less in commissions, I'm still going to expect that same top dollar. I'm not going to drop my sales price $25,000 to hang out over here for this buyer, because the sellers are just not going to do that.
Right.
They want
I think what they think is like all of a sudden the sales prices are going to drop about 3% because because now they don't have to pay the other side. It is absolutely not going to happen. All we've done is made the seller 3% more money, which is great.
Maybe in the future, but not now.
Possibly. Real estate agents earn their commission when they're doing everything they do, because they are not. This is not a one and done. This is a months and months sometimes.
And how many agents help clients look for houses for months, and they're putting them in the driving around gas, everything else. And then all of a sudden they're like, we're going to hold off for a year. So these people have put all this output and all this effort and didn't make any money. Right. Yeah. And it happens over and over, and they're not allowed to charge you for that. That's all free. So I think agents are definitely hardworking. I think there's a misnomer out there. They just sit there, push a few papers, and get paid. That is absolutely not how it works.
They're gassed.
Not
they're
at all.
Driving 17 houses.
Yeah.
Hey, you guys, before I talk a little bit about your knowledge of when you walk into the house and things you could do to save money, let's go out to Sean. Hey, Sean, thanks for joining our show. Good morning.
Hey, how you guys doing?
Real good. What's happening?
Good morning.
The question I got is, I bought a house in West Bloomfield a couple years ago. I got a good rate, and I put my son on the mortgage as a co-borrower.
Yeah.
But is there any way that I could get him off? Because eventually I want him to be able to go out and get a house on his own. Would it be a problem for him?
Yeah,
to
definitely.
get something. If you
Yeah, as long as you qualify on your own. If you're not bringing another co-signer in, if you qualify on your own, you can absolutely refinance. Now, again, I hope there's another reason to refi because I got a feeling you're sitting on a real pretty rate that you might have got 2 years ago, right?
Or Sean, are you asking the question, can you get him off without having to refinance?
Right. That's what I think he said.
yes, that's
No.
the question.
Yeah, that's
no,
the
the
question.
answer is
That's
no.
the case.
That's what the answer is no.
Yeah.
It's just going to
Yeah, you'd have to refi.
Yeah.
You have to refinance, and then you have to take him off the transaction because no lender. See, he's on there as if something happens to you. All right, he's got to pay. He's responsible. So both of you are equally responsible. Both of you are 100% responsible, not 50%, which means that if something happened to you, God forbid, he pays 50%. No, he has to pay 100%.
Correct.
So in order to
Right,
get
right.
him off of that note, the only way to do it is to create a new note, and that's by refinancing the existing note.
Now, if you're asking because he can't qualify because there's a mortgage payment in his own name, if you're making the payment out of your own bank account that he is not on,
Yes.
and we have a 12-month history of you making that, we
can
can
show it.
exclude that payment so it doesn't count against him when he goes to buy a new house.
That's good.
Okay, so
That's huge.
Can I
If
get
that's
one
what
more
you're
question?
asking.
So I'm asking because
All the
I'm
things.
coming up into some financial problems. I've never been late on my mortgage, but I had to get this big credit card. I redid my house, so I took out all these loans, and then I had a business that kind of fell down.
Okay.
But I haven't missed any mortgage payments. But I want to get him off in case something happens
Yeah.
and my credit score starts to fall, and I don't want it to affect his future.
Then that would be that's the thing is even if we excluded it and he wanted to buy something, whatever happens is going to affect his score, and the only way to do that is to refinance him on.
I just want to clarify.
Yeah.
So, what is going on with your financial status? The only thing that's really going to affect him is if the mortgage payments are late,
Correct.
as long as he's not tied to any of your other credit cards. However, I think
Well-
it's important that we
well,
speak
always-
to you after the show to kind of figure out how we can get you in a better
Yeah.
situation with that. But if you miss a payment,
Okay.
yes, that's going to affect him as long as he's not tied to your other debts.
No, I've never missed a payment ever.
Okay.
I've never missed a payment, and that's my sole thing is not to miss a payment. Even though I had this, going through this credit card thing. My sole thing is to make sure my payment is made on the house.
Yeah.
All right,
Sean,
we
how
just sounds
much-
like we need to get you some breathing room there.
Sean, tell everybody, how much more is your house worth than what you bought it for?
I bought it for $360, and it's worth $444 right now.
Okay, there you go.
In a few years.
Yeah.
Yeah.
Mm-hmm.
Yeah.
Good. I'm going to record that. I can play it back to anybody who says home ownership isn't the way to fly. Hey, look, we're going to give you a call after the show because we got to see what your numbers look like. Yeah, we'd like to remove your son if that's possible and maybe get you set up
thank
for
you.
success here. Thank you, sir.
And the truth
Thank
is,
you. I appreciate it.
yeah,
Thank you,
like
Sean.
this is a everyday phone call. So I appreciate his bravery and calling in and putting himself out there like that, because this is a daily conversation that we're having where individuals, you live life happens and you get overextended on your credit card debt, and your home isn't a piggy bank, but that is tangible equity in your
That's a very
home
good point.
that you can use to reset your baseline. Save $350 a month, save $1,000 a month, depending on what you're paying in these credit cards, because it blows my mind that everyone gets really upset over
Of a rate.
6% interest rate.
Right.
But when you look at those credit cards, you're paying 29%, you're paying 30%. If you're lucky, maybe you're paying 15%. I don't know. But like,
Yeah.
that's like you're being touched by an angel on the credit card side. But why
Everyone
do,
knows how I feel
and
about credit card interest.
Yeah,
I
like
don't pay
there's
it.
no reason why you have to struggle. Don't struggle. Make the phone call. Let's figure it out. And
Yeah.
we're
Pay 'em
excited
off.
to be alignment. And bless his heart for worrying about his son like that. I
Yeah.
appreciate that.
That's a great call. 248-539-9797. We're up against a quick break. Love all the ticket texts. You guys are spot on, but we want to hear from you. Make that call. 248-539-9797. We'll be right back.
Yeah.
Welcome back to the show. It's a Hardcore Mortgage Real Estate Business Show. Appreciate all the calls. We want to hear from you. 248-539-9797. Of course, Red Wing playoff push coming up. We got the NFL draft coming here into Detroit. A lot of cool things in Detroit. Yeah. Oakland University, obviously sparking the county here. People all of a sudden discovering that there's an Oakland University. Where is that? It's been in Rochester for several years.
Michigan sports is where it's at. I mean, really don't sleep on us. Like we might go on hibernation mode for a little bit, but someone within Michigan comes up.
Yes.
Always.
Definitely pumped up for Mr. Golke to hit a whole bunch of threes tonight. So we got some really cool things happening. Real estate happens in Michigan in a great way. Why? It's very affordable. That's not changing anytime soon. It's still extremely affordable when you look at the cost of homes all around Southeast Michigan. 2 incomes can get you a really nice house. Hope, you've got a lot of buyers you've been working with, some down payment assistance programs. What do you see a trend happening for the spring and moving into the summer of 2024?
Wow, that's a very good question. I see, unfortunately, prices probably going up, right? And so the buyers need to be prepared. Well, thank you. Yeah, I see prices going up, and I think buyers need to be prepared. They need to plan for their buy. It's not a situation where you can just expect to go in and negotiate necessarily someone down or things like that. So for the new buyers and the first-time buyers, look into programs, look for great lending agents, and look for people who are going to work as a team, because you need creative ways to propose and prepare your deal. That's what I see.
Let's run off to a call here before we run out of time. Fred, you called in. You've got a question. Good morning. Welcome to our show.
Hey, good morning, guys.
Morning.
So I don't have a question, but I am a strong advocate. You guys advised about doing the refi and paying the 6% versus the 30% on credit cards. So I did that in January. My house payment went up $200, but I erased $20,000 of debt at 30%.
Love you. Love you, man.
That math works really well.
And it probably increased your cash flow, right?
Totally. I'm putting more in savings. I'm paying, more towards my principal every month because I do have that extra money now. It saved me $700 a month in payments.
Hey, so Fred, let me ask you this. It's a big question here. What'd you do with those credit cards? Did you tear them up or just not using them as often, or did you get rid of any? What do you got going?
I got rid of one of them, and the other 2 are sitting in a safe.
That's the key. See, that's the key right there, all right? Don't run them up again. You're in a great cash flow position, and it doesn't matter what the rate is on the house because you're not paying 30% on revolving credit card debt.
Right.
If the rates come down again, he can always refinance. And then maybe
when they come down, I'll refinance to the lower interest rate and be right back, and I'll probably go to a shorter term.
There you
You're
go.
the best. Thank you very much.
Salute,
We appreciate
Fred. Great call.
that.
Appreciate that.
Yeah. That was, yes. And that is what we're talking about. Exactly what he just said is
People are so focused on what's the rate, and
Do
it's really
the
not
math.
about that.
Do the math.
Yeah.
It's only about saving money. That's
Right.
it. Save money. Been saying it for years.
and if we
Harvey
look at
hates
it
when
doesn't
I
make
say
sense,
it.
we're going to say, no, it doesn't make sense.
Yeah,
Right.
sometimes that's the truth, right? Sometimes
Yeah.
I just had one the other day. I'm like, look, there's no benefit here. Like, it's not going to help you. There's really nothing we can do. We can reevaluate this in a few more months. We'll see where things are at. But at this point, there has to be a benefit to do this. We're not going to just refinance for no reason. But sometimes the answer is no, but usually we can figure something out.
You guys, a couple cool programs. You want to call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We've got all the programs out there, and especially self-employed programs. Had one of our reps in the office yesterday. We have unbelievable programs. If you're self-employed, we have a 12-month and a 24-month bank statement program. We take an average of the 12 months and we come up with your income. Those programs go 85 loan to value. Again, if you want to purchase a house, you can be a real estate agent. Self-employed individuals, we don't use your tax return. So again, deposit your money into your bank account. Stay organized. Get yourself organized. You could become a homeowner. A lot more families we can help at Capital Mortgage Funding.
That's key. Keep it in the bank.
Yes.
If you're buying a house, you have to have your money documented.
Thank
I understand
you for
that
saying
there's
that.
I understand that there's that conspiracy of failure of the banking system. There's a lot of people with money in their safe and things like that. But when you're trying to buy a house, if you do not have the money in the banking institutions, it's going to be a problem.
May I say something?
Please.
Of course.
Yeah.
Please.
This is part of my buyer's consultation. If you have mattress money, you need to, and I call it that because people put it under their mattress, right?
Mm-hmm.
You need to put the money in the bank.
Yeah.
Because more people have gigs now, right?
Yeah.
And you asked me about trends. I see a difference in the buyers, more people have various and multiple sources of income. So you're going to see buyers who may be doing Uber and they may be doing the grocery thing or
Totally.
and so they're not aware, right? That just because I have the money at home doesn't mean that I have the money to buy a house yet.
Right.
I can't use it. It has to go in the bank, people. So this is
And you can't put it in the bank and buy tomorrow.
Yeah, there's a lot of side
This is
hustle.
a huge, I spend a lot of time
Yeah.
on this topic in the beginning of a buyer's consultation as well, because they just don't, the average consumer is not understanding that you can't just, what's my money? I'm going to put the $10,000 I have in the bank. Well, now
Right.
that's a problem because now it's undocumented funds. And now it would have to sit there for 30, 60 days, depending on what the
Loan
timeline
type.
is and the loan type. So we have to have these conversations up front, but please get your money in the bank, but do so in the way that is going to be conducive towards your loan program if you don't have a gift or a donor or something like that.
Is there a rule how long the money has to be in the bank?
Depends on the type of loan.
Okay.
Yeah. So it's 30 days FHA, 60 for conventional.
Yeah.
All right. Also, you got a lot of side hustle businesses out there, like you said, and hope you touched on. You got Uber, Lyft. You got some social media. There's ways that people are bringing in money, Instagram, and they're on Facebook, and they're getting paid. So again, you got to document this. Part-time income, Lisa, 2-year average.
Yep.
That's key. If you're thinking you got a great part-time job, stick with it. Yeah, especially in today's marketplace. You got some extra time. After 2 years, we can show that additional 10, 15, 20,000 you make. That'll help you get approved for a little bit more of a house.
Yeah, but it's an average. So if you made $5,000 the first year and $50,000 the second year, people are always like, "Well, I make $50,000, right?" And can't you add that? You're going to add those two together, 55 divided by 24. That is the average.
Yeah.
So
And on
people
those-
forget that.
On those bank statement loans
Yeah.
that Harvey's talking about, you have to show a steady stream of
Deposit.
income on a monthly basis. Okay, you have to show it that if it's 5,000, 4,000, 3,000, whatever that number it is, it has to show on a continuum.
Yeah,
It can't-
steady deposit.
For 12 months.
Consistency is key.
Correct.
Consistency is key.
You guys,
think we're
that
done.
music
That it?
says that to done. We wanted to do another hour more.
went
That's
too
okay.
fast.
Hey, we're going to wish everybody a great evening, a great weekend.
Happy
we're not
Easter.
going to be here next Saturday. We're going to take off for Easter Sunday weekend, so we're definitely taking off next week. But we have so much to share with you. And again, Tiger baseball's coming up, a lot of sports, mortgage and real estate world. It's happening out there. Give us a call, Capital Mortgage Funding, all week long, 1-800-LOW-RATE, the best mortgage banker. For Lisa Lawson, for Becky Alley, for Harry Glanz, I'm Harvey Freed, and we want to thank Hope Williams for joining us.
thank you
We
for
will see
having
you in a
me.
couple
It was
Saturdays. Call
awesome.
Capital Mortgage Funding. We'll get you hooked up.